Willie Candler, and welcome to our Q2 Atlanta Industrial Market Update. There were several key themes that stood out during the second quarter. First, leasing activity was strong. Q2 marked the strongest leasing quarter we've seen in the last 4 years, with total leasing volume increasing roughly 22% over the first quarter. What's especially encouraging is that most of this activity came from the new lease transactions rather than a wave of renewals, many anticipated from the 2021 and 2022 lease cycle. That's a positive sign that companies are still making expansion and relocation decisions despite broader economic uncertainty. On the occupancy side, vacancy increased only slightly during the quarter. More importantly, that increase wasn't driven by weakening tenant demand. Instead, it was largely the result of newly delivered speculative buildings coming online. As those projects continue to lease, we expect occupancy to remain relatively stable. Demand also remained healthy. Net absorption finished in positive territory, although most of the gain came from Hyundai's SK Battery's 3.3 million square foot owner-occupied facility coming online in Northwest Georgia. Excluding that project, absorption was essentially flat. However, with leasing activity reaching the strongest pace in 4 years, we expect absorption to remain positive through the second half of the year. Let's take a look at how the Northwest submarket performed. Vacancy remained stable at 8.6%, continuing to outperform many competing industrial submarkets across Metro Atlanta. Another notable trend was the lack of new speculative construction starts during the quarter, leaving the submarket with no projects currently under construction. That said, we are aware of a few developments expected to close on their land and break ground during the third and fourth quarters of this year, so we anticipate construction activity to pick back up. On the investment side, one transaction worth highlighting was CenterPoint's acquisition of Transwestern's Peoples Valley property at approximately $133 per square foot, representing a cap rate in the mid 5% range. That sale reinforces continued institutional interest in quality industrial assets. Leasing activity was led by several significant transactions. Pactra International leased approximately 691,000 square feet in Adairsville. MEI Rigging and Crating committed to 526,000 square feet at Panettone's building in Cartersville. And Challenger Turf leased 261,000 square feet from a private owner in Dalton. Overall, activity across the Northwest submarket remained steady, and we're optimistic that leasing and investment activity will continue through a strong second half of 2026. As always, if you have any questions about the Atlanta industrial market, please don't hesitate to reach out. Thanks for watching, and we'll see you in Q3. I'm Willie Candler with Lee & Associates, signing off.